All right, here we go again. Secretwars. Stan Weinstein combined with my classic chart trading framework. Confirm the trend on the monthly candle chart. Whichever framework you want, confirm, do something. Or apply the same one, apply a stand maybe to the monthly if you can. And then whatever time frame you want to really trade in, at least you know that you have the higher prevailing trend in your favor. Lower the chances of getting whipsawed. Increase your chances of not landing on emotional landmine by understanding the higher trend, defined resistance or support, areas of congestion you might run into, expecting the pullbacks, and getting ahead emotionally of what could happen. It's like, I guess, I always come back down to boxing. And let's say Floyd Mayweather with his classic pull counter, he's actually waiting. It's a patience game. And don't make errors. So he doesn't commit, doesn't make any errors, overthrows his punches, and he just waits. And after that, when the opponent throws a jab or overhand right, he pulls back, and then he hits him with his guard down, and then evades. Understanding that there's resistance defined on the higher trend, and expecting a pullback with contracting volume. You're ahead of the curve. You're like Mayweather waiting for the punch, and you already got your tool set ready to pull back and enter if you see that conditions are there. If you have contracting volume, if you have the pullback close to the breakout line. And it's always, you can't improvise, guys. Whatever you practice is what's going to happen. You can't not have never traded and then expect to understand all the ins and outs and hit a home run there. It's just not going to happen. Or it could, but the chances are low. So the best, and then there's practice with demo accounts. But the best practice is with real money, but with really, really tight money management. So even if you do 10, 20 errors, instead of risking 1% of NAV per trade, risk 0.25%. Who cares? It's real money. And even if you make 10, 20 errors in a row, you won't get drowned in revenge trading or any other stuff like that, guys. All right, another tanh. What the hell is that, man? I get these stickers from stageanalysis.net. For Stan Weinstein, Stan Weinstein screener, honestly, he posts graphs, 10 of them per day, US stocks, Canadian stocks, UK stocks, and I just glance over them, and bam, there's always one or two there that spring to my get my attention. And here it is, tanh, Tantech Holdings, Ltd, whatever that they do. All right, guys, let's get back. Let's do it, Patrick, you talk too much. Well, talking's good, guys. Talking's good. All right, let's see where my monthly defined support is. Oh, here is my monthly defined resistance, and we're above it. So now it's support. If we close above, this is the pattern I see. Always use your imagination. Imagine. And if you see, oh, look at that. There was some price action here, guys, during the month. Oh, breakout. The price action can go back down below that level, 325. I'm golden. What happened during that month? Price action got sucked back in below the breakout line or below that line. And now the market has started to decide that 325 is monthly defined resistance. You see monthly defined support around this area. And candles added. Monthly defined support, monthly defined support. You see the close and opens? Again, wicks below, that's noise. Price action goes back up. And to do monthly defined, month after month. So that's 259 is pretty strong support. And here we are. We haven't tested the resistance in a while. 1, 2, 3, 4, 5, 6, 7, 8 months. But the pattern looks good. You could also make a case that you had a breakout here at 295. Patterns, breakouts, targets of that. Make bigger patterns. Let's see. Let's zoom in. Zoom, 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 zoom. So let's say I would have thought that this was my breakout. No, right here. I could have said, oh, maybe this was my pattern back here. Take it. Then I could have said, oh, maybe my breakout's here. And then after that, doesn't mean you would have played it, but that implied measure move, that target makes a bigger pattern. And now patterns, targets, then you go to another, makes a bigger pattern. And here's where today, after the charts morphed. If we get a monthly candle close above 325, so that's next week, end of May, we'd have a breakout on the monthly candle chart. 260, 26, and the target would be right about here. Could you make a case that you have a bigger pattern even here? I always say the most probable targets, the most probable of the possible targets is the ones closest to the breakout line. And that pattern, if it encompasses into a bigger pattern, then you have higher chances of reaching that target before that one. And that would be the bigger move right there. Right where I call a wall consolidation pattern, breakdown, support, and alternate resistance, and it brings you right there around the $5 area. All right, let's go see on the weekly, man. Stan, where are you? Where are you? Whoa. Okay, let's do that. Zoom, zoom, zoom. Bring it down. Okay, here's the price action. All right. Okay, Ichimoku cloud. Red's resistance, green support. No overhead resistance here. If your price action is above the green cloud, that means you're in uptrend. So I'm going to remove that to remove the noise. So we're above Ichimoku cloud, so that's great. Where is the weekly defined breakout line? Could make a case that we broke out even with this candle right here on the weekly, but not a Stan Weinstein breakout. It's not confirmed because we don't have the volume. We need twice the average volume of the previous 4 weeks, something like this. Big candle like here, big candle like this one here. But volume with a horizontal breakout line, 30-week moving average going up. And if we had the Mansfield indicator with a Mansfield going over the halfway point going up, that would make you the triple confirmed Stan Weinstein breakout. So how much volume do we have here? 5 million. Yeah, that's not twice the average volume of the previous 4 weeks. There's missing the volume. So what I could say for now is here, remember, here's the first target for the monthly. And that's what I say, potential, understanding the monthly defined, higher trend defined resistance. Then at this level, when you reach this target, you might have a price action go back down. And then you might want to play maybe the pullback if it's on contracting volume. Right here. I'm not quite sure. I'm not too confident about this volume here. I would have liked to see the bar maybe up here for this candle, even this candle here, right here, this breakout candle. Not super duper. So I would wait. On my monthly classic chart framework, you could play it if you have the close above the 325 on the monthly. So at the end of the month, you could probably play that and have this first target here and then this further away target here. But to play it with Stan's framework, I would like more volume. So I think I'm going to wait for this. Looks to be in the stage 2, the start, but it might have some consolidation here, maybe a sideways pattern, and after that, or a sideways pattern here, and then after that, explode there, and maybe then we get our volume. Always let the stock do 40-50% move before you enter. It's always a good move. It's not money left on the table. It actually guarantees you more money because you have the 30-week moving average going upwards. That's your trend, guys. Look at the 30-week moving average. I won't lie to you. If it's flat, the trend's flat. If you see it going down, trend's going down. If it's going up. That's a pretty solid indicator of the momentum and direction of the trend. All right, Tanh. I thought I'd get something for Stan. I have maybe something on the using my classic chart trading framework. In either case, I'll get back to you at the end of the month. All right, ciao.